Hello everyone and welcome to today's cryptocurrencies update for Good Friday, April the 15th. And we are going to review the trend is your friend charts, because the trend is your friend as it helps you to use the trend to your trading advantage. Or as Ed Theikota once said, the trend is your friend except at the end where it bends. Please look up many good quotes by this famous trader, Ed Theikota. He has a lot of good quotes that you need to adhere to, I would say, for your daily trading. So let's go that straight to the charts and see what we have. Okay, let's see if this is going to work. And off to the races we go. So here are just simple, the trend is your friend charts. Nothing else. No Elliot Wave forecast and all that stuff. Okay, why? Because most cryptocurrencies are in clear bear market territories. What does that mean? They're below their 200-day moving average. The 200-day moving average is declining. The 50-day moving average is below the 200-day moving average, and the shorter term ones are kind of fluctuating a little bit up and down. Besides that, they're in a cloud, the Ichimoku cloud, and the cloud is most of the time moving down as well. What's the problem with Elliot Wave? Well, there's no real problem other than that corrections are quite hard to forecast because they're made up of ABCs. So they can add any form of ABC to the next ABC. Okay, so here's Cardano. Cardano is in a full-on red traffic light, okay? So we simply look at where price is in relationship to the 10-day, the 20-day, the 50-day, the 200-day moving average, and the Ichimoku cloud. And we also want to pay attention to how are these moving averages aligned or stacked, and where is price in relationship to those. Bull markets, like here in August, September of last year, have price above the 10-day, which is rising, and above the 20-day, which is rising, and above the 50-day, which is rising, which is in turn above the 200-day and rising, and of course the cloud. This is a full-on bull market. Eventually, the trend bends and it will turn, and eventually you go into a bear market, okay? Bear markets are highly unpredictable because they are corrective in nature. So then you have an ABC up, and is that then all we get, or is the ABC up simply an A of a larger ABC? It's very hard to know with certainty which of those ones it is going to be, literally. So we always have this question, is it going to tag on another wave, yes or no? We have to look for breakouts, breakdowns, all those things. Impulses are much easier. You get 5 waves up, and that's pretty much it. The 5 waves can subdivide, and that's about it. But we are looking higher, and in bear markets, you can have very complex counter trend rallies that are very hard to negotiate and navigate. So then you simply look at the trend. What is the trend telling you? The trend will then help you decide in should you be aggressive to the long side or should you be defensive to the long side. Here you should be aggressive. Here you should be defensive. Okay? So please keep that in mind. Be defensive on Cardano. Let's look at Avex. I'm not using a line chart just to show you the candlestick chart instead. Avex is now also in a bear market because it's below all the moving averages. Trade it accordingly. Good times is when we are above all the moving averages. The chances of higher prices continue as long as we have this bullish setup. Bad times is when price is below these moving averages and below the cloud, obviously. Know the environment you're in. If you know the environment you are in, where you are trying to participate in, your trading will be much better. If you don't know that, you are simply just kind of floating around without any knowledge. Here is where you buy dips, right? Clearly, this is where you buy dips, and here is where you would sell the rips, so to say. Very defensive. Please keep that in mind. Yes, trends can change all the time, but we always anticipate at some point the trends will emerge. Please keep that in mind. I'm not going to do any predictions and forecasts on how high and low things will go. Again, in bear markets, the upside disappoints and the downside surprises. Here is BinanceCoin. Notice where BinanceCoin is in relationship to its moving averages. It is reasonably bullish, but it's nothing compared to what we saw here in early 2021 on the left side of your screen. Entirely different type of market environment. Okay, honestly, this is simply, as you can see, a sideways market. Is it consolidating to go higher? Maybe, maybe not. Who cares? What you're gonna do is simply wait. Okay, here it looked like it was sideways consolidating as well. Should you have bought here? Maybe. Or should you have bought here? I prefer to buy the trend because the trend increases the odds that you are on the right side of the trade. That is what you want. You don't need to buy the bottoms and sell the tops. That is not where the money is made. The money is made in riding the trend. Some traders that are really, really good and have made their millions really wait for anything to have pretty much rallied 100, 200% before they actually enter, because then they know this is a really strong trend and the chances of me losing money are very small. And that is what trading is all about: risk management. Everything else, who cares? Folks that only look at the profits are the amateurs and dumbasses. There you have it. You gotta manage your risk. If you don't manage your risk, I hope you're gonna lose all your money. That's really what I hope, because then you've taught your lesson by the market. Moving on to Bitcoin. Here is Bitcoin, same environment. What type of environment are we in? This is an environment indicator that will help you for your trading. Okay, so if I then say, well, we expect higher prices, etc., etc., remember the Elliot Wave is less reliable if we are in these type of downtrend environments, because corrective price action is inherently overlapping and very prone to whipsawing. So please keep that in mind. Uptrends, impulses are much easier. You are really anticipating 5 waves up. You can't be anything else other than a subdivision of those 5 waves. Well, if that's the only problem we're dealing with, then we know we simply buy the dips. Look at this. This is where you buy dips. We're above the 50, 200 day. Look where we are now, below the 50 and 200 day. This is not where you buy dips. Okay, this is not where you buy a dip. There are times where it won't work as much, and there are times where it works really well. So please use that to your advantage. Also here, I have a plethora of trading ideas on these charts. Use them. Okay, if you say, oh, I can't use this work, it's up, it's down. Well, use these ones. Buy when we're above the 200 day, sell when it closes below the 200 day. These are all these trading system signals to your advantage. If you don't use it, it's on you, right? Very simple. It's presented to you every single day. So there's always a way to make money. And the best way to sometimes make money is by not making any money at all. Sounds counterintuitive, but he or she who loses the least amount of money in a bear market comes out the winner. So expect to lose money, but not as much as one would if you have no stops in place and all those things. Okay, so please keep that in mind. The market environment is pretty red. This is your traffic light here on the left upper hand side of the market chart. It's red. Keep that in mind. Should you be aggressive? No. Should you be defensive? Yes. Defensive means if you want to trade the long side, small position, tight stops, take profits quick, all those things. All right. Aggressive means bigger positions, hold longer, wider stops, all those things. Okay. So please keep that in mind. Moving on to Ethereum. Also here, the trend is not so friendly. It failed here after 200 day. I would say 2 out of 3 are red. We're below the 10 and the 20. Actually, that should be 3 out of 5 because we're also below the 200 day. So we're also below the 200 day there. So the long-term trend is bearish. It means we're subject to selling pressure. There's selling pressure in this market and not buying pressure. So if there's selling pressure in the market, buying is, of course, a counter trend type of move. So knowing the trend of the market, bullish versus bearish, will give you the tips needed to trade better. This will give you a good tip. Be aggressive on the long side in an uptrend. Buy the dip, bigger positions, wider stops, take profits later, etc. If you're in a bear market, you still want to go long because you can't short. It's very hard to short cryptocurrencies. Be cautious on the long side, okay? Sell the ribs, meaning take profits quickly, smaller position sizes, tighter stops. You manage that risk appropriately. You cannot treat different market environments the same. Okay, especially in bear markets, you need stops. If you don't have stops, GFL, all right? There's explicit F in between the good and the luck, because you are setting yourself up for a recipe of disaster. Because if you don't really have a stop here, it's okay, right? If we're going higher here, it's fine. You kind of will make it, but we're not in this anymore. We are in something entirely different. Okay, this can easily break down to 1100. All my forecasts be damned. It does what it does. Okay, my forecasts are wrong to prove them right. The moving averages and the trend of the market is right. Absolutely right. That's what it is. No worries of not buying here and we're going to rally all the way to 10,000. It's much better if you say, I'm going to wait here. I'll buy it at 1100 once we came from 500 and I can still rally real nicely. And again, use these moving averages, for example, as your trading cues in where is the price in relation to the moving average. Having an entry and an exit signal or strategy, critical. Luna did really well once it broke out. Again, these are just simply closing prices line. And now, again, you can see how things are now falling quickly. I think this topped at 118 and we're now trading at 80. So this one has already lost, say, from 120 to 80, okay, is 33% of its value in a matter of days. That goes quick. So what you do, of course, is scale out, raise your stops, all those things. You still can buy the dips, but you still also have to have appropriate trading technology of a strategy. Should you have bought here, May, June, July? I wouldn't think so. It looks like you want to buy here and sell there. Yes, of course, but nobody can do it. I would simply wait probably for the breakout. Here is where things start to look bullish, right? Here things are bearish. So that's a sit on your hands. Just sit on your hands till they're numb, till they're blue, till they hurt. No pain, no gain. And eventually you'll get the signal that, aha, now it's time to be more aggressive. So then you had a very nice multi-month aggressive long side of market. Then that market trend changed. Remember, the trend is your friend until it bends. And then eventually it went back up again. Here we are looking good again, and we're changing once again. These are the Elliot waves, of course, that are unfolding, but it shows you where you should be in and where you should be out. And right now, this is starting to fall apart. And the Elliot wave, as I've presented many times before, suggests a larger major four is underway. Here is then Polygon or Matic. Trend is your friend. What is the trend doing? Look on the right side. This is not a good trend. This is not what it was here. Okay, so in bear markets, the upside disappoints. I was looking for Matic, remember, to break above 175, and then it could target 205. It didn't even get to 175. Absolute disappointment. Why was I looking for the $2? Because of the pattern that was emerging, was a diagonal. Can it still get there? I'm sure it can if it wants to, but we need to break above the 200-day moving average because we've learned, like here on the left-hand side of the screen, once you're above the 200-day moving average and the clouds, chances of good things happening increase. And right now we're on the wrong side of the equation, meaning chances of bad things happening have increased. So the upside disappoints because of the selling pressure. People can't sell quickly enough. So therefore, the downside will also surprise because people will sell it off further. Stops are therefore key to your survival and your portfolio survival. Bull markets are the exact opposite. Literally, please buy ahead once it's bull, once it's bear, and wear it accordingly to the trend, and then you'll make the right decisions. Because this is a webcast, it's Good Friday, it's fine. Again, we don't need to go through all the tiny little details. A webcast that can help you in your trading. Maybe you're also really good at it, but I know a lot of people are struggling because this is the hardest part of all. And always stick to the rules and always know where you're in with the market. Lastly, Solana. How's Solana doing? Also, this one is reasonably bearish. See here versus here. Okay, don't try to long this. Okay, don't try long this. It's quite different than longing these dips. Okay, that's the difference. Know the difference in the trend to make the right trading decisions. Okay, markets are not some sort of ATM. Quite far from it. No financial market is some sort of ATM that will just give you unlimited amounts of money. You just buy something and you'll get a return. Far from it. Honestly, you are actually the ATM. Most traders are the ATM to the market because they are the ones that are being cashed out, extracted money from, because they don't know where they are within the market. If you don't know where you are within the market, meaning are you in a downtrend and an uptrend, you'll make the wrong trading decisions. So then you will become the ATM. Thank you very much. My bank account will be very happy for that, because money moves from the impatient to the patient. Always will, always has, and always does. So if you know where you are in the trend, then you are ahead of the game. And you will understand and appreciate that there are fat years and lean years. And sitting on your hands is actually a very pleasant thing to do. Not losing any money here, or losing very little money, whereas some people might be down 30, 40, 50, maybe 80%, and you're down 10, 20%, you come out the winner. And you say, oh, don't want to lose any money. Well, forget it. Okay. Again, the market is not a ATM. It's not. You're entering a very risky environment. And so you need to understand that environment. Appreciate and learn that there are the fat years and lean years. Always, just, cryptocurrencies just don't go up. Far from it. Same with financial markets. They just don't go up. Most of the time, actually, financial markets go sideways and then they rally. Same with the cryptocurrencies. Rallies are fast. This is a 4-month rally and we're already like in an 8-month decline. So do the math. Once you learn that by sitting on your hands and doing nothing, even if your hands are completely blue and numb, you appreciate that you know and understand the market environment. So is Solana kind of trying to turn around? Yes, it's trying. It really is, but we are not even close to where we are here. Is Solana maybe something here in the left-hand side of the screen? Potentially. It's possible. We'll know eventually when things turn around and then good times are ahead. For now, it's not clear yet. Okay. Now also here, of course, the correction was above the 200-day moving average. And the current correction seems more like a counter trend rally because we're below a declining 200-day moving average. And that is really critical in understanding of, okay, I'm going to long this rally. Yes, you can. My trading systems, for example, longed it, but only half a position. It's like below the 200-day moving average. I have indicators that go quicker to selling and all that stuff, and stops are raised quicker, and we get a nice little profit out of the shorter term trade. Okay, so please always trade appropriately. So again, we don't always need to know where things are going. There are many, many ways and strategies available to you to make a decent trade, but know the environment you're in. You don't need to know the exact lows and highs. You need to know the trend. Corrections, big and small, bear markets or not bear markets, whatever the definition is of a bear market, are the hardest to forecast price pattern for many reasons. However, don't let that scare you away, because some tools work better than others in different market environments. And the Elliot Wave is less useful in corrections, because these corrections, as I said, have a plethora of options available to them, and it is impossible to know which option it will be. Was the entire ABC we saw all of the corrective bounce, or was it just wave A of a corrective bounce? It's very hard to know that beforehand. Once we see 5 waves up in a bull market, it's a little easier to know if that was wave 1 of 3 or 1 of 5 or etc. It's a little easier. So the Elliot wave becomes a little bit more of a jello throwing for distance contest during large bear markets. You simply have to wait and see if the bounce is going to subdivide, yes or no, and become more complex. It can be a 535, a 333, a 335, a 533, many patterns, or even 33333s, many patterns. So it is unfortunately hard to forecast. Again, that's not my fault. It's not a lack of my capabilities. I recognize all of them. So it's an honest assessment based on my experience and knowledge of what corrections are. Knowing that is not a weakness. It's actually a fantastic and great strength. Knowing your limitations is an absolute strength. And I know the limitations of Elliot Wave in corrections. It kind of falls apart because you have so many options available. And the current stock markets as well, there are at least 4 or 5 different options available. It doesn't help my members at all in that sense of which one it's going to be. So you kind of have to sit and wait, sit on your hands, let the chips fall in place, and then assess the trends. When you know the trend, it's actually much better. You don't even need to know the Elliot wave, honestly. So when you know your environment you're in, use that knowledge to your advantage. Right now, most cryptos are in extended corrections / bear markets. Eventually, they move out of them. Nothing goes down forever, nothing goes up forever. You know from previous webcasts when I expect them to bottom. So if they're bottom in June, July, it's pretty soon. It's a month and a half. A month and a half sounds like an eternity, But remember, Bitcoin has been trading, I believe, since 2011, maybe 9, whatever it is. So a month and a half is nothing for Bitcoin. It's absolutely nothing. So patience. Remember, patience. Money moves from the impatient to the patient. A month and a half is nothing. On a time frame, right, the geological time frame, it's absolutely nothing. On a trading time frame, it's nothing. Stock market's been around since the 1800s. 1.5 months is nothing. Cryptos have been around for over 10 years. 1.5 months is nothing. So we just have to sit and wait till the trend changes. So accordingly, all the charts are predominantly negative, meaning according to the correction and the bear market. Trade it accordingly. The trend actually supports my larger, bigger picture view that we are in this correction. And now it is up to the market to decide when it wants to bottom. June, July, September, December, who cares? I don't control the markets. We'll just have to let it play out. In the meantime, the trend will tell us where we are. So don't suffer from FOMO. FOMO is the fear of missing out. No need to, okay? We have no actually emotions at all involved. We simply wait for the charts to tell us when to become more aggressive and when to become more defensive. Right now, being defensive is the right posture. And I think knowing this is the best advice you can have and the best trading tool available to you. We don't need to know anything else at the moment. Next week, we can go back again in the nitty-gritty if we so desire. But again, remember, the Elliot Wave can quickly fall apart where you think up is down and down is up, and it goes exact other way around because it is very corrective price pattern that we're dealing with. And then the forecastability really drops. The odds of being right drop. Once we have a strong uptrend, the odds of being right are much easier. If anything, most likely the forecasts are going to be too low and price will extend to the upside, which is only to your advantage. So please use this information as a nice fallback on, oh, wait a second, this is the market environment we're in. Maybe I should adjust my expectations accordingly, and I should also trade accordingly. Again, sitting on your hands, not losing any money, it can sometimes be the best advice you ever can get. It's really cheap. I'd rather pay $50, $60 a month to not lose thousands. Wow, what an investment strategy that is. Because those that don't pay anything might keep on buying lower and lower, so to say, waiting for that rally to happen. But it won't, because the charts tell us it's not there yet. They'll turn around, not just yet. So I hope you appreciate this little bit more philosophical, I would say, webcast, but it also is very, very practical, very, very applicable to having the right mindset and knowing where we are within the chart environment for your exact trading decisions. And remember, in corrections, the Elliot Wave becomes a little bit more of a jello throwing for distance contest, kind of hoping it will stick. And sometimes it does, sometimes it doesn't. And that's not always advantageous for your trading. So please be careful and mindful that in bear markets, the upside disappoints and the downside surprises. Take care, trade safe, have a wonderful Easter weekend, regardless if you celebrate it or not. And I'll see you all on Monday. All the best. Bye.